An increasing number of multinational corporations are transferring their manufacturing operations from China, raising significant concerns about the repercussions for China's industrial sector. This shift has led to heightened public dissatisfaction within China, manifesting in widespread protests. As the year concludes, disputes over unpaid wages have escalated, prompting workers in various regions to resort to increasingly severe actions to claim their earnings. The situation is dire for China, compelling the Chinese Communist Party, CCP, to engage in negotiations with the United States while publicly denying such discussions. The rationale behind the CCP's willingness to negotiate is evident. Factories are closing, layoffs are occurring, often without compensation, and the economy is on a downward trajectory. However, acknowledging these challenges openly poses a dilemma for the CCP, which prefers to maintain a facade of stability even as clandestine talks progress. Recent reports indicate that recruitment efforts have ceased at numerous factories, with closures accelerating in locations such as Tianjin. Facilities previously endorsed by authorities, including a circuit board plant in Shijiazhuang and a biscuit packaging facility in Wuxi, are shutting down operations. This trend extends beyond Tianjin. Numerous closures have been reported in Beijing, Shandong, Jiangsu, and Nanjing. In Shanghai alone, 4 cosmetics factories have ceased production, leaving only one operational under substandard conditions for older female workers. In light of these developments, job seekers are urged to accept any available employment opportunities without hesitation. Recognizing the severity of the situation has compelled the CCP to pursue negotiations. A noteworthy report from a South Korean media outlet suggests that despite official denials, senior Chinese officials discreetly visited the U.S. Treasury Department. A photograph captured 3 indistinct Chinese officials entering the U.S. Treasury building on December 24 alongside 10 aides wearing identification badges for a G20 finance ministers meeting that confirmed their Chinese nationality. While their identities remain unverified, their badges matched those worn by China's finance minister during an earlier meeting with South Korea's Minister of Strategy and Finance. Efforts were made to prevent media coverage during this visit. Reports indicate that Chinese officials actively obstructed journalists from photographing senior figures entering the U.S. Treasury building that morning. Despite press complaints regarding restrictions on capturing images, Chinese representatives insisted on their right to prevent photography and demanded deletion of all smartphone images taken during their visit. While diplomatic law nuances may be unclear here, U.S. regulations permit photography in public spaces without an obligation for deletion upon request. Returning to earlier discussions about media interactions, when journalists sought clarification regarding an individual who interrupted an interview session, he declined to disclose his name but was identifiable through his ID badge displaying his name and nationality as Chinese. It is clear that negotiations are underway despite ongoing denials from China's leadership. The CCP often applies pressure on those who expose inconsistencies within its narratives. Platforms like YouTube witness diminished visibility for videos critical of its claims due to systematic downvoting practices. Therefore, if you find value in our content and wish it greater visibility amidst these challenges, we encourage you to like and subscribe. On a broader scale, this report warrants attention as just yesterday, the Chinese Foreign Ministry publicly asserted there were no negotiations with the United States unless President Trump completely rescinds tariffs, a statement that starkly contrasts reality. Their position criticizes perceived undue pressure from Washington while advocating for engagement based on equality and mutual respect instead. The tariff debate initiated by the U.S. has elicited a clear response from China. Readiness for confrontation if necessary, but openness towards dialogue under equitable terms remains intact. According to China's perspective, misuse of tariffs undermines global cooperation under WTO guidelines while adversely affecting international interests. Many major U.S. media outlets interpreted this statement at face value without delving into insights regarding CCP operational secrecy. Unlike other governments which may adhere more closely to factual narratives, the CCP frequently disseminates information contrary to reality. For instance, when they announce GDP growth figures, it may actually signify decline. Similarly, when they claim reductions in youth unemployment, it might indicate increases, leading them to cease reporting altogether on such metrics. When they deny negotiations, it often indicates active discussions are indeed taking place between parties involved. President Trump himself confirmed recent dialogues occurred between U.S. and Chinese leaders shortly after reported meetings took place, when inquiries were directed towards him regarding trade discussions, although specifics remain undisclosed. The future may reveal further details surrounding these interactions. However, currently discussions appear ongoing, including meetings held with China this morning. Reporting may contain inaccuracies, but thank you for your attention nonetheless, Jeff. What remains unanswered is, why does CCP persistently propagate misinformation? The answer lies within its internal narrative portraying America as struggling while asserting China's resilience. A portrayal inconsistent with current economic realities marked by substantial disruption within China itself, where factory closures abound, layoffs proliferate, orders rescinded, all impacting workers, factory owners alike, along with CCP governance structures themselves. Despite claims asserting GDP growth, tax revenues reflect adverse trends corroborated through insightful analyses provided by Financial Times, indicating reduced output among factories sending workers home primarily due impacts stemming from U.S. tariffs, resulting cancellations, postponements among American clients' orders last year. Approximately 15% exports directly routed towards U.S., whilst another estimated 15% indirectly via intermediaries like Vietnam, Taiwan, Cambodia, South Korea, thus roughly 30% total exports reaching U.S. shores. Conversations held between Financial Times representatives' social media platforms reveal workers sharing visuals depicting idle production lines, notices signaling impending shutdowns emphasizing tariff impacts. Wang Xing, leader Shenzhen Cross-Border E-Commerce Association, representing over 2,000 companies, reported merchants expressing apprehension, many instructing suppliers pause shipments, leading some factories temporarily halting production. Our export orders vanished overnight, prompting us suspend operations, remarked plastics factory worker Fujian Province. Current circumstances highlight significant reliance upon exports, often executed aggressive trade practices inundating global markets, undermining local businesses aiming monopolize manufacturing sectors, yet rejection products by other nations exposes weaknesses inherent. Model United States possesses potential procure goods alternative sources, even manufacture high-value products domestically, though transition requires time. Viable options exist sourcing lower-value goods. Countries like Vietnam, India, Philippines, Latin America. Essentially ongoing trade conflict seeks recalibrate economic dependencies away from China. Signs progress emerging direction. Illustration: Foxconn commenced assembly iPhone 16 units. Brazil suggesting strategic shift amid evolving global dynamics. United States continues rank among lowest. Certain aspects Foxconn indeed operates under auspices. Apple decision underscores prevalent pattern. Manufacturers relocating. Many surprised, questioning notion life depends solely upon China's manufacturing prowess, asking, do other nations possess capability produce goods too? Businesses adapt. Necessity confronting changes head-on, learning crucial lessons. China lacks reputation innovation, thus heavily relies mass production. Maintain stance. Global market facing imminent challenges. Potential economic crisis necessitating substantial stimulus. Overvalued yuan, diminishing demand. Stagflation, burgeoning youth unemployment. Growth, tax revenue failing match GDP figures, raising suspicions around claims. Reality, current economic structure failing serve majority citizens effectively. At personal level, life difficult. Many meager salaries averaging 2,500 yuan. Second-hand phones, cheap rental rooms, inexpensive meals, minimal entertainment, poor living conditions prompting reflection. Existential questions. Future in contrast. YouTube astonishing revelation pledging $64 million. Daily creators shortage. Numbers discovering videos fewer thousand views. Common ideal time. Explore channel creation, whether personal presence not actively promoting smaller newer channels providing significant financial incentives. Daily curious launching developing channel. Invite participation. Complimentary training bootcamp. Join link. QR code provided. Places limited. 100 participants per call. Act swiftly. Reserve spot. Returning discussion manufacturers becomes evident. Crucial order fulfillment. Factory survival. Cancellation spells disaster, threatening enterprises' livelihoods. Halting operations. Grasp full impact. Must understand factory operations. Consider large t-shirt company once seeking cut costs. Manufacturing prior tariffs would source suitable capable handling $1 million orders, initially paying deposit 50,000 100,000. Get production underway. Operating factory business perilous, considering narrow profit margins. Typically achieve profit margin ranging 5–15%. Order consequently $1 million order, expect earn 50,000 150,000, necessitating investment approximately 850,000. Materials essentials. Important note: receive full payment upfront, only 100,000. Customer remaining funds sourced, capital reserves, secured bank loan. Given typically slim profit margins, frequently lack substantial cash reserves. Relying bank loans strategy involves manufacturing goods. Instance: t-shirts delivery. Receiving agreed $1 million payment allows settle loans. Compensate workers, ideally enjoy profit. Approach operates smoothly. Favorable conditions, however challenging times characterized sudden tariff increases. Cancellations. Situation becomes dire. Owners having committed funds taken loans. Existing orders burden unsold merchandise now facing shortfall. Promised revenue predicament. Significant factor behind closure. Numerous factories secured loans. Produced merchandise means fulfill orders incurring unsustainable losses. Compelled declare bankruptcy unfortunately also means factory workers left without wages.